Yo, yo, yo. Yeah. Look, I was just messing with the colors or whatever. My lips still real red, all right? But today, what we're going to do is we're going to figure out if the world is in fact ending. Not really. It's probably not that big of a deal. I know the whole world's reaction to yesterday's price action was that we are very obviously going to crash tomorrow. And let me be honest. Just like I said in the video yesterday, I personally am bearish, generally speaking, on the market. But I do also fundamentally believe that retail is going to get trapped along the way. It's not going to be this just like, oh, look, it's the '08 fractal, and we're just going to repeat that or whatever because it looks so similar. It's not quite that simple most of the time, because I'm going to let you know that I know, this is a crazy thing. And look, I know my brightness is all over the place or whatever. Like, I kind of like it. I think I look cool. But institutions are not only following what we're saying on social media, they even own the social media companies that we use as a method of communication. So the amount of data that they have on this is actually on retail sentiment is probably much better than we could ever ever even imagine. So let's just get into the video, talk about some macro perspective on SPX. I got to be pretty quick here because we got some family things going on that are a priority over this. But let's get into it. So basically, look, this is what I'm drawing up. Okay, you have this solid green line, and I want to show you a volume profile analysis that I've done as well. You have this solid green line that is acting as a form of support, has acted as a form of support in the past. This is a bull trend, okay, that SPX does not want to break through historically. Now, you have this shorter term, brighter green uptrend right here that you're trading above here. Let's zoom in a little bit more, make it easier to see. I'm sorry. I'm gonna hide this one for the moment, so you can see. And you're trading along this right now. And on SPX's chart, you're actually trading right at it, right? So right now, you're testing it again to see if it's going to become resistance. You've used this midline that we've been watching as a nice little support zone for now, and you've had good bullish volume step in here if you're looking at the hourly chart in the past hour as well. So that's definitely something to be watching. You have to draw this midline resistance that you've had. You have to draw this in your chart right now because this is just the most crucial area to be watching. And then again, you have this short-term support trend that you're going to be trying to find as support again for your bullish case. Okay, let's look at that long-term trend line again. Let's remove the shorter-term one if I can find it. I could have just renamed it, couldn't I have? There it is. All right, so this one. And perhaps we can change the color of it or the thickness. Thick, boy. All right, we'll make it blue. This one, look, this is actually, I know it seems like we're in a bear market, but this is actually a very aggressive bull trend. I would even go as far to argue that it is unrealistically bullish. For you to maintain this sort of upward momentum from this '08 move that you had back here is absolutely unsustainable. And you can see historically here, if we go back to the monthly chart on SPX, that you are just completely out of your mind, okay? This bull trend is completely unrealistic and cannot go forever. Cannot. You cannot maintain this sort of upward momentum. It's just impossible. So just keep that in mind, okay? We are actively testing this sort of trend. And look, there are other trends at other angles that you can be following as well, but I just want you to keep in mind that this is the trend that is currently being tested for support in the market, okay? This is the macro trend, and you have a lot of reason to say, hey, perhaps and oh my goodness, Can we talk about head and shoulders for a second here? Okay. Dude, I have never seen so many head and shoulders and inverse head and shoulders charts in my life. Like, I mean, dude, there are so many people that are going, oh, look, it's a head and shoulders. Right? And then there's other people that are going, oh, look, it's an inverse head and shoulders or whatever. Like, these are just accumulations and distributions. And head and shoulders is a real pattern, but the way that it's being used right now on Twitter and YouTube is absolutely ridiculous. Like, it is crazy. We'll talk about those in another video or something on, like, other charts that we're watching. But, like, dude, like, seriously, it's insane. But anyway, what are we trying to say here? So, you are, right now, you have, like, this spinning top sort of. I mean, I'd say that this looks pretty reversely in the short term, this daily candle that you have, that you flashed here on SPX. Looks like you went right through to your 885 retracement on this move, and you're bouncing up. You tested your 707 as resistance now. And, yeah, so now I would say that in the short term, you look like you want, and I mean, look, today, and this is what I'm saying, like, all day today, this thing has kind of looked like it's just this kind of accumulation move after this big sell-off that you had. I will say it's a little top-heavy, a little bit more top-heavy and rounding than I would like. And I'd say that this move down was actually pretty healthy for the market. And I'd say that probably maybe you come back and you have some more retesting to do here. But I do think that in the short term, you at least come up and retest the liquidity that's up here. Around $400 on SPY, $398. That sort of region is what I'm expecting. So, and again, I'm going to get long-winded here. We're at 6 minutes already. So I'm gonna break this down as fast as possible. Let's look at our volume profile so that I can tell you guys what exactly I'm watching, okay? I know a lot of VPVR has been going around in a lot of the circles that I follow, that you know, the people that I watch or you know, like, have had relationships with. But look, this is a fixed range volume profile that I've drawn here. That is basically based on the trading range from January-ish of 2018 all the way till now, okay? And the reason that I wanted to point this volume profile out is because this essentially shows that we actually have pretty good support liquidity above around $300 on SPY. I know most of you guys pay attention to SPY on a day-to-day basis, okay? And the next volume shelf that hasn't been tested is this 3,400-ish, which is going to be give or take $340 on SPY, okay? And you have that correlation down here. I mean, look, actually, when you look at it this way, this really does make an attractive case that eventually you do retrace down here to this 707. Holy shit. Because you've been playing these 707s. We talked about it over and over again on the channel. You do have a strong case to be made that you could... and it's going to be a fight. I don't think that you're just going to, like, rush down through here. But you could come down here and play this 707 at 273. Or, well, it would be 277 on SPY. And I am coming around to the belief that the 0.5 Fibonacci is totally in play now as your next point, right? And we saw the 382 behave as support. Let me make sure this frickin' thing is on log. Okay, thank you. Oh, no, you know what? This isn't the good fib. This isn't the good fib, remember? This is the good fib. Okay. All right. Oh, so this would be a 786 as your point of control. I think that that's a little aggressive. This actually lines up a little bit more with what I was trying to point out. So on these volume profiles, the reason that I'm doing this is because generally speaking, if a volume profile looks like this, where you have more shallow at the top and it's more kind of more volume towards the bottom, this is seen as bullish, generally speaking, okay? Now, that is on the macro perspective. Let me redraw that. because it kind of looked funny. That's on the macro perspective, right? And what that means is that you most likely are going to find a bottom near this large volume shelf locally, okay? If it were the other way around, that is considered macro bearish. Now, I'm not sitting here saying that right now we're just going to turn around and rock it off. What I am saying is this is pretty much this is bullish in the sense of that macro crazy bull trends sort of thing for continuation for the US stock market. With that being said, I do think that you do have to go lower and test these lower volume areas within this chart. So right now what you're doing is you're trading. See this volume pocket here? I'm doing a really bad job of demonstrating this, but we've talked about VPVR on the channel. Right now, you have to fill up this volume pocket, okay? And you have this nice shelf here at the bottom. You see this this big volume spike that you have here. That's not what I wanted. I wanted this. See this? See that big volume spike right there? That's a volume shelf. That's why you're finding support here. Look, I can draw a line right through it. Horizontal. Right? This is where you bounced. This is why you're bouncing here, right? Because you have this nice volume shelf. You've had a lot of volume action occur here. If you break through this level, right? Now suddenly you don't have so much volume support, until you get down to 3,400, 3,300. So this is that, and I know I've made fun of people on Twitter because they're, I think they're being overly bearish, everything like that. And I don't think it's going to happen overnight, but I am seeing this potentially as a continuation. If you break down through this 390-ish, 3,889 level, you're most likely going to see continuation down to 382. And let's extend these lines out here. And also, you have to take into account that this slight move here, where we had this bottom kind of break through, right, does become a new precedent for an expansion on these moves down, okay? So basically what that means is it does potentially signal that this line is no longer valid and that this line now becomes your support trend, which is not the best case scenario if you're a bull, because what that means is you have the potential for much more range. So let's say that you pop up here, right, like we said, and you get rejected out of 400. You can become so much more rangy, right? And this is how those sort of cataclysmic sort of crashes occur, because you kind of create the potential for that big move down. So this is something that you're gonna want to be watching. You need to find support on this midline trend. You need to break back above this 407,236 Fibonacci, and ultimately you need to break this bear trend. And if you do not break this bear trend, probably on your next swing up, you're setting up for that retail dream scenario, okay? The one that everybody on Twitter has been dreaming about so much. And I will say that right now, again, like I said yesterday, bears are clearly still in control in this market. And again, I've never made the claim that bulls were in control. I think that it's really crazy, because when I come out and I'm bullish, right? We have runs, and then at the end of the run before CPI, I was saying in the video, my bias is bearish. I said on Twitter, my bias is bearish. I said on Twitter the night before CPI, we got to clear out 400, and we got to test 400 and see what happens there before we can make a case for 430 or above on SPY. And what did we do? We crashed right through 400. What does that tell you? That's a failure of that level, right? It was a very technical move that we had there. And so, like I'm saying, I think that the most likely scenario is you come up and retest that 400-ish level. And I do think that the most likely scenario is you fail. And when you fail, you're going to create new lows. And it is going to be incredibly important at that point for you to find support on that 707 Fibonacci, which you never tested on this move, by the way. And I think that you will locally. I think that the likelihood is, and remember, we actually said that a few weeks ago on the channel, but I do think that you will locally make that sort of move, where so 400, and then you come here, and then you're going to have some sort of accumulation move back up off of this 707 kind of move. And it could be faster or slower than this. We'll have to judge it at that time. But I do think that temporarily you will find support in that region. But more and more, I am starting to buy into the technical bear case if you can't find support at that 707. If you can't find support at that 707, you are fully justifying a further move down, a further retracement, and a new low on this 3638 here, right, which was your previous fib, and you will go down and test this lower liquidity that we have on this fixed range volume profile. And at that point, you're probably going to have a bounce, most likely. So what does that look like, right? So an extension down here. Obviously, you're not just going to break through this, and then, boom, and everybody's going to think, right? So that is the sort of move that you'd be expecting. Probably you can draw out your midline in some sort of fashion here. Probably in between, there will be a 707 retracement that you'll be able to draw, et cetera, right? But yeah, so that's pretty much how I feel about the market at the moment. Breaking this midline, though, and then failing it on resistance, and then that's where you can get that kind of crazy swooping motion down that everybody on Twitter, all of the financial experts on Twitter are calling for, okay? So those are the sorts of moves to be looking for. Draw the midline, draw your Fibonacci's, pay attention to volume profile. But again, think of it like Tetris, okay? This volume profile, think of it like Tetris. And think of institutions looking at it like until all of, let me get a crayon here, all of this is full like this is, they're not going to be ready because they haven't gotten enough shares to mark the price up. Okay, on a macro perspective, that is how institutions view the market. Forget the inflation narratives, forget the like burn Wall Street narratives and retail's winning narratives or whatever. I'm telling you right now, when this happens, institutions are winning. They are going to win on this move. 100%. Whichever direction. If they determine that they have enough stock, they want to mark up temporarily to then bring it back later, they're going to do that, and they're going to win that way as well, okay? They are basing this on a day-to-day basis on what they can get retail to buy and sell for them to make money, and they win every time. Composite Man wins every time. I said it would be a short video. I completely failed at that. 20 minutes. Hopefully you enjoyed. Hopefully you gained something from it. And until next time, peace. Black hole sun.